These Canadian companies are absolutely huge and they are totally rocking it even in a bear market. Holy banana bread, let's do this. With the economy in the shape that it is nice to have some heavy hitter stocks in our portfolio. We are talking homegrown large cap Canadian stocks that are proving their stability and ability to stroke the fires of returns. By their very nature, they are blue chip megaliths and they have no idea how to roll over and cower from a bear market. These are stocks that will make your portfolio feel, well, really good. Before we count those blue chips, let me know in the comments your largest market cap stock. I am always grateful when you drop in on the home of free financial content on YouTube. While you are here, please subscribe as you don't want to miss a single moment, and a huge thank you for that click. I am so excited for today's list as these are some of my favorite stocks. By their very nature, these are not going to be stocks that you have never heard of before. These are superstars. They are big with a return-focused attitude that just will not give up under any circumstances. The qualifications for today's list is pretty simple. They have to have a market cap larger than $10 billion, and they have to have a total return in positive for both this year as well as last year, as we are not here to get excited for who has lost the least. Also, I tried to include only one company from each sector, otherwise energy was going to dominate this list. Okay, so without any further ado, let's do this. So, kicking off our list at number 7, we have Nutrien Limited with a ticker of NTR. They are based out of Saskatoon, Saskatchewan, and they are a fertilizer company. They are the largest producer of potash and the third largest producer of nitrogen fertilizer in the world. With the war in Ukraine, their stock has only benefited. They have a market cap of $54.48 billion and a respectable beta of 0.88. Their earnings per share comes in at 18.68. They also have a price to earnings ratio of 5.57. Their debt to equity ratio comes in at 52.54. It is going to be nice to have a list where I'm going to totally like these debt to equity ratios. Their dividend yield comes in at 2.529%, which is paid out quarterly in the amount of 48 cents USD per share. Let's look at their growth. In 2021, they entered the year at $61.61 and then finished it all up at $99.10 for a return of investment of 60.85%. Adding in the dividend, the total return for 2021 for Nutrien is 63.38%. Holy banana bread, that is not too shabby. In 2022, their share continued to rise and is currently, well, at the time of recording, $104.11. This is an ROI of 5.06% and a total return in 2022 of 7.59%. I do like this stock, and I have to say, I am almost ashamed that I do not currently hold any of them. Coming in at our 6th spot is Metro Incorporated with a ticker of MRU. They are based out of Montreal, Quebec, and they are a major Canadian grocery chain. They run grocery stores, pharmacies, and also provide a supply chain for many smaller convenience stores, mainly in Quebec. They have a market cap of $18.07 billion and a beta of negative 0.01. A negative beta can indicate an inverse relationship to the market, but this is so close to zero that is just super non-volatile. Their earnings per share come in at 3.60. They have a price to earnings ratio of 21.30 and their debt to equity ratio comes in at 62.28. Their dividend yield comes in at 1.435%, which is paid out quarterly in the amount of 27.5 cents per share. Let's look at their growth. In 2021, they entered the year at $56.76 and then finished it at $67.93 for an ROI of 19.68%. Adding in their dividend, the total return for 2021 is 21.12%. In 2022, their share, of course, continued to rise and is currently, at the time of recording, $76.67. This is an ROI of 12.87% and a total return in 2022 of 14.30%. There is, of course, some controversy surrounding Canada's big grocery chains, but nonetheless, as investors, we cannot deny the stability of these returns. I will just add, I did exclude Loblaws only because Metro did a little bit better, but if you guys want to check out Loblaws, I did recently do a deep dive on them, and at the end of the video, there will be a link to that deep dive. Coming in at number 5, we have Alimentation Couche-Tard with a ticker of ATD. They are based out of Laval, Quebec, and they are a massive convenience chain with stores in North America, parts of Europe, Africa, and even Asia. They have a market cap of $62.08 billion and a beta of 1.01. Their earnings per share comes in at 3.54, and they have a price to earnings ratio of 17.44. Their debt to equity ratio comes in at 75.37. Their dividend yield comes in at 0.713%, which is paid out quarterly in the amount of 11 cents per share. Let's look at their growth. In 2021, they entered the year at $42.65 and finished it at $53.97 for an ROI of 26.54%. Adding in the dividend, the total return for 2021 is 26.35%. In 2022, their share continued to rise and is currently, at the time of this recording, $61.72. This is an ROI of 14.36%, and after we add in those dividends, a total return in 2022 of 15.07%. This is a solid blue chip business that is only going to outperform a lot of the market, even if we do enter a recession. In our 4th spot, we have Fairfax Financial with a ticker of FFH. They are based out of Toronto, Ontario, and they are a financial holdings company. They have their hands in everything from, well, insurance to investment management. They are also the priciest stock in our list today, but you can always buy them fractionally on Wealthsimple. They have a market cap of $18.47 billion and a beta of 0.95. Their earnings per share comes in at 23.67. They have a price to earnings ratio of 31.59. Their debt to equity ratio comes in at 45.00. Their dividend yield comes in at 1.699%, which is paid out annually in the amount of $10 USD per share. I will admit I only have one stock currently that pays out an annual dividend. This is something you don't see a lot of. Let's look at their growth. In 2021, they entered the year at $427.29 and finished it at $636.08 for an ROI of 48.86%. Adding in the dividend, the total return for 2021 is 50.56%. That is not too shabby. In 2022, their share continued to rise and is currently, at the time of recording, $747.66. This is an ROI of 17.54% and a total return in 2022 of 19.24%. This is another really solid investment for the financial sector, and so far, they have made mincemeat of the bear market. Coming in at number 3, we have Teck Resources with a ticker of Tech.B. They also have a Class A share with a similar return, but a smaller market cap. They are based out of Vancouver, British Columbia, and they are a mining and mineral development company that specializes in coal, copper, and zinc. They have a market cap of $21.18 billion and a beta of 1.15. Their earnings per share come in at 8.39. They have a price to earnings ratio of 5.24, and their debt to equity ratio comes in at 38.02. I like that number. Their dividend yield comes in at 1.137%, which is paid out quarterly in the amount of 12.5 cents per share. Let's look at their growth. In 2021, they entered the year at $23.64 and finished it at $37.11 for an ROI of 56.98%. Nice. Adding in the dividend, the total return for 2021 is 58.12%. In 2022, their share continued to rise and is currently, at the time of this recording, $43.97. This is an ROI of 18.49% and a total return in 2022 of 19.63%. Mining and minerals are looking to be huge for Canada in 2023, so this is absolutely one to be watching. Almost at the top spot, we have Dollarama with a ticker of DOLLAR. LOL. They are based out of Montreal, and they are Canada's biggest dollar store chain. This is business that will absolutely thrive in a recession. They have a market cap of $22.32 billion and a stable beta of 0.77. Their earnings per share come in at 2.50. They have a price to earnings ratio of 31.08. Their debt to equity ratio is negative, which is usually never a good thing. However, with the rapid expansion and growth of this company, I am not going to worry too much about that, as I believe they're going to get that back into the positive, hopefully within the next year. Their dividend yield comes in at 0.285%, which is paid out quarterly in the amount of 5.5 cents per share. Let's look at the growth. In 2021, they entered the year at $51.99 and finished it at $64.49 for an ROI of 24.04%. Adding in the dividend, the total return for 2021 is 24.32%. In 2022, their share, of course, absolutely continued to rise, and it is currently $77.70. This is an ROI of 20.48% and a total return in 2022 of 20.76%. Dollarama is a safe bet in your portfolio for riding some profits out through that coming recession. Okay, this one's exciting. Coming in at our top spot is Tourmaline Oil with a ticker of TOU. They are based out of Calgary, and they are one of our biggest oil companies that specializes in the extraction and development of both crude oil and natural gas. The energy sector has been on fire, and Tourmaline has been blazing the way. They have a market cap of $26.93 billion and a more volatile beta of 1.71. Their earnings per share come in at 16.46. They have a price to earnings ratio of 4.84. Their debt to equity ratio comes in at a super awesome 3.16. This is a company that is absolutely well positioned to thrive. Their dividend yield comes in at 1.254%, which is paid out quarterly in the amount of 25 cents per share. They also had a special dividend in 2022 of $2.25 per share. That is awesome. Let's look at their growth. In 2021, they entered the year at $17.39 and finished it at $42.28 for an ROI of 143.13%. Holy friggin' banana bread. Adding in the dividend, that total return for 2021 is 144.38%. Wow. That is a nice return. In 2022, their share continued to rise, and it is currently, at the time of this recording, $79.93. This is an ROI of 89.93%, and adding in the dividend, and we'll also add in that special dividend too, we get a total return in 2022 of 95.62%. That is absolutely awesome. It is a mind-numbingly good return, and the oil sector is, well, it's massive in Canada and a very good investment. Oil may be falling right now, but it is always going to be making a comeback, and companies like this have so much potential to make you a good amount of change. These are some fantastic companies that we will continue making money into the recession, and who doesn't like to see some green in their portfolio while we navigate that sea of red in the bear market? As usual, do your due diligence before adding any of these stocks, or even take them to your financial advisor and see how much they smile when they look at what these companies are currently doing in this bear market. The fun does not have to end here. Check out my video on Loblaws that I will link on the left. Otherwise, check out the video on the right that YouTube thinks you will like, maybe a little bit more, maybe not. Your click will decide who is right, and I will see you in the next video.